Hello, everyone. Tim Davis here. Just getting home and nice movement in the market today. And there's a new trend that is new near-term trend that is unfolding. So I thought I'd step in here and do a quick market review. Today is Tuesday. Today is Tuesday, June 28th, 2022. So now it's now 4:05 p.m. Markets just closed. We are approaching the another end of a month. And here's where we stand. So I want to point this out. Here is I'm looking at a 4-hour chart of the VIX. And like I said before, you got to pay attention to these pivot points in the VIX because the VIX is, and we're still in the bear market, folks. So pay attention to these pivot points in the VIX and you'll know, for you bullish long-term traders, you'll know, or investors, you'll know when it's a good time for you to start taking some of your profits. Because if you look at the VIX, and I'm gonna go to a daily chart real quick, then I'm gonna switch back to a 4-hour chart. I want to show something. So the VIX hit this high around June the 13th, right around close to 35 bucks. From there, we had a sell-off for, I guess, 2 weeks or so. And look where we're at now, right back down to a zone where the VIX gapped up from. Right back down to the zone where the VIX gapped up from, and we started to find support. And what do we get today? A big green candle on the VIX. And look at the full stochastics, how it's starting to stop and trying to turn up. Look at the wins percentage, oversold territory. It is starting to turn up. That's a very positive note for the VIX. Very negative note for our markets that the VIX hit a zone, hit a support zone, and now it's starting to reverse course. So you got to pay close attention to that. Now let's take a look at a 4-hour chart of the VIX. Here's our 4-hour chart of the VIX, same scenario. Look at the oversold, how oversold the VIX got by looking at this 4-hour chart. So again, we had a VIX that pretty much rallied up to a point of that $35 level and then it pulled back for the next couple of weeks. And then it hit a oversold zone, looking at the full stochastics, and an oversold zone, looking at the wins percentage. And now we are starting to turn up again. Starting to turn up again. So more than likely, this is going to be a sustainable rally up in the VIX, which means our markets are probably in store for the next leg down. And I say the next leg down because we could be heading for new lower lows, and we'll break that down on a longer term chart here in a second. So again, we see the pivot point, we see the reversal in the indicators on the short-term 4-hour chart, so that telling us that we are possibly in the beginning of another rally up, the next rally up for the VIX after a sell-off over the past week or two. Now, if that's the case for our VIX, then we know what must be happening to the overall indexes. So let's look at that. Let's look at a daily chart of the S&P, SPX. All right. So as I highlighted before in my previous video, so more than likely we have the major indexes that had a nice rally back up towards that it's 50-day moving average on a daily. One thing I highlighted is that there was a couple possibilities. Either price action was going to get up to this 50-day moving average and reverse, or up to the trend line, upper trend line of this channel and reverse. Well, for the S&P, it looks like we got right just before that trend line. I mean, before the 50-day moving average. And look at that. Look at this price action that is formed as soon as we got to that point. Look at that. Big time reversal. And what happened during the time that we rallied? And I said eventually we probably see some gap fills. And that's exactly what happened, folks. Look at that, almost to a T. This gap almost filled, but not quite. So that one almost filled, but didn't quite make it that far. And I said the S&P, we might not make it that far. It looks like we didn't. But we got a gap fill here. And also we had a gap fill down here. So those are two gap fills. Now, where to now? First of all, I think we definitely going to on the S&P. we have a couple gaps here on the S&P on the way up. There's a slight gap here. Let's see if I can highlight that a little bit better. So there's a slight gap here and one tiny gap here. A little gap in between there. So what I believe is going to happen is that we're going to come down, possibly fill these gaps, and I think we're going to possibly head to lower lows and possibly break below this previous low of 36.36. So that's something that we got to look forward to over the next couple of weeks. I think we're going to continue to trend down back to the bottom of the channel and S&P and fill those gaps by looking at the spike higher in the volatility index. And if we was to look at a longer term weekly chart, we would see that this just continues to bleed off. Now, what I will be watching for this week, or the next 2 weeks or so, is if price action breaks below the 200-day moving average on a weekly chart. If that happens, folks, we could see a real big move down. I mean, a large move down. If we break that, that's a major moving average on a longer term chart. So be mindful of that. If the S&P breaks below that 200-day moving average, we tested it here, got to bounce off of it, like we're trying to head back there now. If we don't get a bounce here and we fade through, we could see a big move down before we get a rally back up. And again, looking at the monthly charts, you can see, folks, we are still in this. We are in a bear market. Look at that monthly chart. Monthly chart is about to test. It's starting. It's got to bounce. Actually, got to bounce off of that 50-day moving average, as you can see here. And look what's happening. The price is pushing price action back down. I believe there's a huge possibility we may close below that 50-day moving average on a monthly chart this before the week is out. That could be a strong down move for the S&P. All right. All right, let's glance back at now there's a 4-hour chart. You can see how we broke back below the 50-day moving average, even on a 4-hour chart, like we heading back down to the lower part of the channel. Now let's take a look at the Dow Jones. So looking at the Dow Jones, again, same type of scenario on the daily chart, rally back up to that, towards that 50-day moving average, filled a gap on the way and starting to reverse. So the 50-day moving average act as a level of resistance. Could not break through it. We're starting to reverse. The wins percentage is hinging lower. False stochastics is hinging lower, and the RSI is also starting to hinge lower. And even if I was to, there's no difference, folks. We are in a bear market, so we're going to have these bear market rallies on the way down. So it's got to look for the possible pivot points when we start to head back lower. And one of the easiest way to look now is see what the daily chart is showing us. The daily chart, when we get back to the bottom of this channel, normally we get these rallies. When we hit the bottom of this channel, hit it here, rally, hit it here, rally back up. And now the 50-day is acting as a strong level of resistance. So these rallies are getting shorter. And then if we start to have this 50-day start to bend, we could see another, a fierce move down. That's Dow Jones. Let's take a look at the Nasdaq. Nasdaq Composite, same scenario, perfect one right here. Almost hit that 50-day moving average. Exactly, almost. Lowest gap in between that. But look at the now the Nasdaq actually filled all of these gaps. So let me get rid of this now since this is no longer relevant. So there was a gap here in Nasdaq. That one got filled. There was a gap here, up, down. That one got filled. And there's a slight gap here. So all these gaps got filled on the way back up. So now, on the way back down, we have a gap here. A little small gap in between there. You see what I'm trying to get to. The small gap in between on the way down. This gap right here is already filled. This one right here. A small gap in between these two candles. That gap is filled today. So let me get rid of all this. So over the next week or so, maybe even less than that, because the moves down have been a lot quicker than the move ups. So we could see again a retest of the lower trend line. So we could see the Nasdaq actually head down and break this lower low we had here, 10,565. We could see that be broken over the next day or so, or over the next week. So that's a look at the Nasdaq. And we already looked at the Dow Jones, right? I think we already did the Dow. So now let's do the Russell. Russell, same scenario. Back up towards that 50-day moving average, got reversal. Fill that gap. This gap could not quite make it in. Obviously, I said that we might not, some of these gaps might not even make it back up to, we'll make it just about to the 50-day, which we didn't quite make it there even on the Russell. And we starting to reverse already. And what did I start seeing today? All week actually long, all week long, and last week also. There's been a lot of heavy put activity that's been showing up in some of these ETFs. The Russell, the IWM has been the most active with these with put option activity. It has been extremely active over the past 2 weeks. Even while the market was going up, they were jumping in and loading up on these small cap puts. Look at the activity here. September contracts, October contracts, August, July, and look at these big numbers, folks. I mean, and this has been going on while the market's been rallying, and I've been noticing that, so I've been loading up on them too. Just sit back waiting for the next move down. And IWM, they've been really fiercely attacking the IWM with a lot of put option activity. A lot of put option activity being focused on the IWM. And I mean, all up and down the chain, short term, long term, medium term, they just been buying it. They just been jumping in here, buying them all. There's some activity floating around this week. This is next week expiration, not much there. Some in the money contracts, but you get the picture. There's been a lot of activity. There's a lot of activity here with the Russell. They've been really jumping in here and placing bets that we are in store for much lower prices. And the same thing has been occurring with the SPY. There's been a lot of bets placed there as well. A lot of bets being placed on lower prices for these major indexes, and just don't think it's going to stop anytime soon, folks. Folks are really playing the downside on these markets. Longer term, shorter term, you name it. A lot of contracts been floating around the August and September for a lot of these indexes for looking for lower prices in the market. Some have been huge, some have been not so big, but you get to pitch a lot of activity. Here is some major action here with the August 374 strike with the SPY, 60,000 contracts traded versus just less than 7,000 open interest. That is a big difference. So that's what we consider unusual option activity. So again, the reversal is in effect. We see price action got muted right just below that 50-day moving average, and like we're starting to bend and head lower. Now, ultimately, what I'm definitely looking for on the VIX, guys, hear me talk about it, is I'm looking for eventually the VIX to break out above this $39 level. If that ever happens with the VIX, folks, we're gonna really start to see an acceleration to the downside markets. All right, one last thing two last things we'll take a look at. One is the tool that tracks S&P 500 companies that are trading above the 200-day moving average, SPXA 200. And it too, same type of action. We see this percentage stopping just below its 50-day moving average, like it's ready to head lower. This could actually head back down to the zero level. We can continue to tag this while we're in this bear market, folks. Rallies off of the zero level, back up, back down towards it. I think we'll probably be heading there soon. And that's that. And let's take a look at while we're looking at movements. Let's take a look at oil. The oil market possibly may have is doing the opposite. It's starting to reverse. Funny how that works, ain't it? Here's a daily chart of crude oil. Look how oversold we got on the RSI. Look at the oversold RSI reversal back to the upside. Where's percentage reversal back to the upside? Where's percentage reversal back to the upside? Price action just closed. Actually, look at that. Closed right above its 50-day moving average today. So tomorrow is going to be a telltale sign how where oil goes from here. Got to close above its 50-day. So if we get a push off of this 50-day tomorrow, we're going to probably see a continuation of a huge rally in oil back up towards this 122 level. That's crude. Also, natural gas. Natural gas also hit oversold territory. All right, now my cursor's not working. Okay, here we go. Natural gas hit oversold territory. Look at the RSI and deep oversold territory. Where's percentage in deep oversold territory? Full stochastic deep oversold territory. Where to? Right to its 200-day moving average. Looks like it's starting to reverse back to the upside. So, folks, commodities, especially oil and natural gas, pay close attention to those because they pretty much is another sign that inflation is not letting up just yet. You know what I'm saying? What happened was a lot of these commodities, especially oil and natural gas, got too overbought. It got so overbought that it was doomed for a major pullback. We saw the correction, and it looks like it may be time for nat gas and crude oil to resume their up move and make an attempt, to reach all-time highs. We have to see how that pans out. But I think the rally in crude oil and nat gas is just beginning, and I think the pullback in the markets, overall indices are just beginning, and the rise in VIX is just beginning. All right, folks, I wanted to point all that out. Hopefully this is some news that you can use. And until next time, Tim Davis here signing off, and I will catch you guys on the next video.